Hello there, this is the Big Story segment on BDTV, where we discuss key issues shaping our nation, our economy, and industries at large. Today, we'll be looking into the real estate sector, exploring why real estate has become the third largest sector of Nigeria's economy. The NBS's recent rebasing report put real estate as the economy's third largest contributor, moving up from its earlier fifth position. And this morning, we want to take a look at the development in the sector over the years, as well as the challenges and future of this million-dollar industry. To throw more light on this conversation, we're joined by Mr. Odunayo Ojo. He's a consummate real estate professional who has been involved in property development, asset management, private equity, and advisory services for various asset classes. He has held several roles, such as being the CEO of Alaro City, Director of Development and Project at Eagle Hills, Abu Dhabi, Development Director at Laurus Development Partners, Vice President at Ocean and Oil Holdings, and is also a member of the Royal Institution of Chartered Surveyors, RICS, and the Nigerian Institution of Estate Surveyors and Valuers. Is currently the MD CEO of UPDC PLC. It's a pleasure to have you on the morning show, sir.
Thank you very much.
We've also have in the studio joining me this morning, I have Mr. Chuka Uroko, who is our property editor here at Business Day. Good morning to you, Mr. Chuka.
Good morning.
So let's go straight to the conversation for this morning. Some years back, to you, Mr. Odunayo, real estate was where every Nigerian wanted to birth their investment. But in the last 4 to 5 years, we've seen a downturn. The NBS's recent rebasing report has put real estate as the economy's third largest contributor, moving up from its earlier fifth position. Now, to some people, this might look surprising. But for you, could you please give us some insight as to what's really happening here?
Thank you very much, and it's a pleasure to be here. So the real estate sector of the Nigerian economy has always been a major sector. It has always been a major contributor to Nigeria's GDP. The recent rebasing just highlights the critical nature of the real estate industry to everything that happens in the economy. The real estate sector is very pivotal in the way in which the Nigerian economy is structured. As you know, there's a huge demand for housing, which is a part of real estate. Everybody needs somewhere to stay, and we have a huge population to serve in that area. So as a result of that, we're having a growing population, we have a young population, which means that housing will continue to be a critical need, going into the future. And as the population grows, and as the young population also begins to go into, the working class and working group, we see that the demand is naturally going to continue to grow into the, medium to the long term. And that is the reason why, it is not surprising to some of us in the industry that real estate continues to rank very high, in the list of contributors to the GDP of the country.
I know Mr. Chuka probably wants to come in here, so I'll just let Mr. Chuka ask.
Yes, taking you on what you just said about housing, a critical aspect of real estate being a very important aspect of human existence. But here in Nigeria, we find that there is a kind of concentration of effort for developers like you. Everybody is at a narrow market where you have luxury apartments and all that. And this is to the detriment of those in lower and middle class segment of the society. Don't you think that it could be a threat to the society? Because we have a larger percentage of people in that class than those who you people are serving.
Okay, so that's a very valid question. But I believe that what you might be referring to is home ownership. Because housing is not just about home ownership. Everybody lives somewhere. So there's the home ownership market, there's the home rental market as well, which is very, very vibrant. So as an investor, or as somebody who is participating in the housing market, you can either be a homeowner, or you can be
A renter.
a renter. So we must not lose that part of the conversation, because there's also a huge market for the rental business. The main issue with home ownership is multidimensional, and it requires a structural review of the housing industry to be able to fulfill that. Part of it has to do with the high cost of finance. As we know, with the high interest rates regime that we have currently, it becomes very difficult for any intending home buyer to attract or obtain, low interest rates for mortgages. Also, the tenure of the credit that we see in the industry, it does not typically support housing
development.
Now. The good news is that there's been a lot of intervention recently. You may have heard about the MREF and the uh, family home funds and the NMRC and so many other initiatives that are being targeted toward improving the home ownership aspect of this conversation. We believe that in the medium term, we'll begin to see the impact of these policies. They're very positive and we welcome them. We believe that with interest rates gradually coming down and with the tenor of credit elongating and supporting the housing home ownership initiative, we'll see the value chain start to move from the higher end of the market, which you referred to, the luxury end, to middle income housing. And then maybe we can also start talking about the lower end of the market, which requires, a lot of support. And, it's also valid to mention that because of the inclusion of the pension contributions in the eligibility for housing mortgage equity, we also see that the working class will be empowered in the short to medium term to be able to take advantage of these opportunities. So these are the things that are being done in improving the home ownership aspect of the conversation. But the home rental aspect is already very active, especially in the middle income segment of the market. We see a lot of investors going into that area because that's where you have the critical mass, and we see a lot of people, even from Nigerians in diaspora to the Nigerians here in Nigeria, participating in that aspect, buying real estate to be able to rent out, to provide more housing to the teeming Nigerians.
So we've spoken about home ownership and then the home rental bit. Let's talk about the estimated value of the real estate market. Now, Nigeria is estimated to achieve a value of 2.61 trillion US dollars by 2025. For you, do you think that this projection is realistic? Are there gaps you see that can work against the realization of this, let me say, ambitious estimate?
The estimate is ambitious, but I think it might actually be scratching the surface. Because if you look at the demographics of the Nigerian population and we see the distribution, we realize that we're a young nation. And as more and more of the younger generation get into the working class, this size of the market can only increase. We believe that the estimates that we see today, depending on who you are quoting, some people say the housing gap is 28 million units. Some people say it's 20, some people say it's 25.
Depending on who you're
regardless of what the number is, it's a huge number.
Yeah.
It's a huge number. And it takes a lot of inputs. So there's all sorts of inputs that go into delivering housing and delivering real estate in general. From land to infrastructure cost to construction costs to services, to energy. All those things go together into, the value chain of what housing and real estate is. So we believe that this may actually be a conservative estimate, and as audacious as it sounds, the housing and the real estate market is very deep in Nigeria.
Yeah, and speaking on the housing and real estate market, how much does it actually cost to start a real estate business in Nigeria?
So real estate is not one business,
Yes.
you know, and I think when people talk about real estate or housing, the mind always goes to developers who build houses and who sell houses. They're just one very important,
Aspects
but
of
that's just one aspect of the industry. So if you're a professional, okay, you can start your business in real estate by just being a broker. You don't need anything more than your skills to do that. Depending on which part of the value chain you want to play in, I would encourage a lot of youth and a lot of the enthusiasts of the industry not to think of only real estate in terms of the capital it needs to build houses. You can play in your own little area. You can specialize also in one aspect of the industry. Some people are specialized. For instance, lawyers have a role to play, engineers have a role to play, architects have a role to play, estate surveyors and valuers have a role
facility
to play,
managers.
facility managers have a role to play, suppliers, traders, people who sell cement, people who sell building materials, people who sell electrical appliances, and all the way to the contractors. You have the small scale contractors, you have the medium scale contractors, you have the large contractors, you have small developers that just do one building, you have developers that do a series of buildings, you have big developers that do thousands of houses. So it's a very, very diverse industry, and I can tell you, you and I can start a business of real estate tomorrow if we decide to.
Absolutely. I agree with that. Mr. Chika, I know you want
Yeah, so I still want to take you back to the rebasing and real estate because by the NBS estimate yesterday, we are told that inflation has now dropped from 34.8 to 24, which means we are down by 10%. And then each time you talk about real estate, you talk about macroeconomic indices as major problems, challenges affecting you perhaps as a developer. Because inflation, we are talking about inflation, we are talking about interest rate, we are talking about exchange rate. All these impact negatively on real estate development. And now my question is, with what can happen to inflation, for instance, are we going to see a drop in house prices? Are you as a developer now going to reprice your products to reflect what we are told that the economy has improved tremendously? What are we expecting?
It's a very good question, and the jury is still out, on what the impact will be, because there are other dependencies. So it's good news to learn that we are beginning to see a cooling, in the economy, and some of the reforms and the restructuring of the economy is beginning to take positive effect. It will be interesting to see how the CBN reacts to this information and how the rates adjust, because this is one of the things that affect the real estate industry. The cost of credit is very important and it's pivotal to everything. Um, so it will be interesting to see, what kind of rates we see
Going forward.
And if the NPRs begin to trend down, and we also see maybe the banking industry and the financial services sector also respond to this downward trend. That will have a direct positive impact on the cost of doing business, not just for the real estate industry, but for the economy in general. And there's a multiplier effect of interest rates, which will also be felt in the real estate industry. In addition to that, there's also an input of that in the cost of construction, because everything macroeconomy, also affects the cost of, importation of goods, lines of credit, and so many other things that add to the eventual cost of delivering units. So it's a welcome development. We also want to see inflation numbers go down. The estimate and the outlook uh, from the experts this year is that we'll continue to see a downward trend, and when that happens, it will translate into, ultimately a reduction in cost, which would inevitably be transferred to the end users and the customers. So, so these are the outlooks that we are hearing from the experts, and this is also what we hope would happen, between now and the end of the year.
Right. Okay, you please go ahead.
I still on the rebasing aspect. For real estate to move from its fifth position as major contributor to the GDP to come down to third position, it means something has happened somewhere. And if something has happened somewhere, some people were responsible for that thing to happen. So who are these people? Are they the UPDCs or the NMRCs, or who are these institutions and individuals who actually made this possible?
So, in order to understand, how real estate was able to move from the fifth position to the third position in terms of contribution to GDP, it's important to understand what happened during the rebasing. So what happened during the rebasing is that there was a reclassification in part of some of the contributors to the GDP, and there was an introduction of some sectors that were not adequately captured. So for instance, agriculture. Agriculture used to be, a very big bucket.
Yes.
And agriculture has been decoupled now into some components, crop production and other components like forestry and things like that. So what happened is that concentration on that aspect was decoupled. And when that happens, there is a rearrangement of the order. In addition to that, telecommunications was also extracted from, I believe, information and communication. What that also means is that reorders the hierarchy. And then
the content of the basket.
Exactly. So it's a basket that is constantly being reappraised as you rebase. So what that means is that as that rebasing was happening, the different components were moving. And you see that real estate, has always been like top 5 or top 6. Once that rebasing happened, it meant that the contribution of real estate became very prominent. And for the players in our industry, it is not surprising for some of the reasons that we've talked about. Housing is a basic need. There's a huge demand for housing. Housing is also growing, and this is where, I also want to, allude to the players in the industry. Because for the industry to be growing, it means that the players in the industry are active. So the likes of UPDC PLC, we are contributing our own quota to the growth of the industry and, invariably to the growth of the economy. So many other participants are also in this same area. And the enabling policies that we've also talked about will even ensure that this growth continues into the future. Because as you enable demand, as more and more people are able to move into the home ownership bracket, as more and more people are able to utilize their pension accounts and are able to take advantage of some of these policies, you begin to see that if even though the rebasing is a reclassification, the growth that is happening is going to sustain the real estate sector as one of the major contributors going into the future.
Thank you very much, Mr. Aldayo. So we've spoken all about, our focus for the conversation today is how Nigeria how real estate has become the third largest sector for Nigeria's economy. And obviously we know that in a city like Lagos, we know that we have a very thriving real estate business, but at the same time, we've seen building collapses across the country, particularly in Lagos. where would you put the blame on, and what policy and regulatory measures do you think are required to put pay to these collapses and their costly consequences? Because we're seeing properties worth millions of naira collapsing at random. So what's your advice?
It's a very unfortunate trend, the trend of building collapses, and it's something that it's been in the news and has been debated extensively. So it's a multi-dimensional responsibility to ensure that the integrity of the building construction industry is intact. I believe almost every player in the sector has a role to play, starting from the designers who put the plans together. We need to ensure that our engineers, our architects have the required training skills and abilities to be able to design properly, and not to have this situation where buildings fail. So it starts from there. It starts from education. It starts from the quality of the workforce, even from design. Then you go to the people who actually do the construction. We need to ensure that the ethics of that particular profession is upheld, so that people do not use substandard materials, people do not use cut corners, so to speak, in the process of building construction. And regulators also have a very big role to play, because they are the ones that ensure that the guidelines are enforced. So the real issue is not that the policies are not there. We have very robust guidelines and policies that talk about what you should do. But the problem has always been that people do not follow those guidelines. And sometimes the administrative capacity to be able to monitor and police these developments are scarce. So there needs to be an improvement in the enforcement of those policies. Then also the business side of things also. The developers have a role to play, because developers bring everybody together, and they are the people who are central to how capital is deployed in this industry. So developers need to be interested in the structural integrity of their buildings, and make it a point of duty to ensure that they do not allow any player, from the consultants to the suppliers to the contractors, to do anything that would jeopardize their reputation, and then, of course, lead to loss of lives and investment.
Mr. Chika, do you have any more questions?
Yes, I think a very last question. You mentioned some interventions made by the government that contributed to what we have today in the area of where real estate is. And you mentioned new policy like MREF. Before MREF, you had something like National Housing Fund, NHF. Before that time, we still had the Nigerian Mortgage Refinance Company. And all these things were playing basically the same role. Now we'll come with MREF. My question is, what is MREF coming to do differently? That will now have something away from what you used to have, and perhaps impact on both the developers and home seekers.
Yes, so policies are meant to be reviewed from time to time, and by the time policies are introduced and they are implemented, after a few years or within a period, those policies are to be evaluated reviewed, based on their success rate. So as we've moved from one policy to another, some of them have had varying degrees of success. And I believe that all those have culminated into some of the inputs that went into the recent structures and the policies that have been put in place to make them better. So when some policies were evaluated, some gaps were identified, obviously. and this is how it is in any part of the world. You know, as you implement a policy, you will see gaps. And those gaps, when you review or when you introduce new policies, you try to fix them. So the direction, I believe, of the MRIF is to empower the end user, the customer, to be able to get, mortgages, to make mortgages available at rates that are reasonable.
Affordable.
And it has been identified as a major um, factor in limiting home ownership in the country. So I believe that where we are today is a journey. It's a journey that has taken many years and has taken many reviews and feedback, from the experts and the participants in the industry, and we believe that even this one, there might be an MRIF 2.0 or another policy introduced in the future that would take a lot of the comments from the implementation of these policies, and that is how industries progress, and that's how economies grow. So we believe that this is where we are today as a result of where we were yesterday and some of the things that we have gone through.
Yeah, and on a very lighter note, before I let you go, what's the most profitable side of the real estate business?
I would say every aspect is profitable. It depends on your risk appetite. You cannot talk about profit without risk. So depending on your risk appetite, if you are risk averse, you do not want to risk a lot of your capital, then you go into services. You can use your skills and then you earn your fees. If your risk appetite is a little bit higher, then you can join developers. You can risk your capital and the returns and compete. So I would say every aspect is profitable depending on your risk appetite.
Thank you very much, Mr. Odunayo, for joining us this morning on The Big Story, as well as you, Mr. Chuka Oroko. It was very lovely speaking with you this morning.
Thank you. Thanks for having me.
And that's how we bring it to a wrap here on The Morning Show. Do stay with us for more updates.